Sam here. Today we're diving into the heart of market dynamics to uncover how a single economic indicator, retail sales, can send ripples across the entire financial landscape. Did you know that the latest shopping spree could be the secret behind a surge in tech stocks or a dip in gold prices? Before we unravel this connection, make sure to hit that like button and subscribe to my channel for more in-depth market analysis. We'll be exploring how retail sales data provides a sneak peek into consumer behavior, shaping everything from media group, retail sales report with charts and graphs, consumers browsing products in a store, Federal Reserve building exterior, investor watching financial news at its stock at it distribute _equally, investor sentiment, Federal Reserve policy, the price movements of stocks, gold, currencies, and even cryptocurrencies. Let's get started. Let's talk about the stock market. When retail sales figures come out strong, exceeding expectations, it's like injecting a shot of adrenaline into the veins of the market. Investors get excited because it usually signals a healthy economy, consumers are confident, spending money and driving economic growth. This positive sentiment often translates into higher stock prices, especially for companies in consumer discretionary sectors like retail, entertainment, and travel. On the flip side, when retail sales disappoint and fall short of forecasts, it can send shivers down the spines of investors. Suddenly, concerns about economic slowdowns, reduced consumer spending, and lower corporate profits start to creep in. This fear can trigger a sell-off in the stock market, putting downward pressure on stock prices. Now, here's where the Federal Reserve, or the Fed, steps into the picture. The Fed closely monitors retail sales data as a key indicator of economic health. Strong retail sales give the Fed more leeway to raise interest rates to combat inflation, which can impact borrowing costs for companies and potentially slow down economic growth. Conversely, weak retail sales might prompt the Fed to keep interest rates lower for longer or even cut them to stimulate the economy. These interest rate decisions by the Fed have a ripple effect on stock valuations and investor sentiment, making retail sales data a crucial piece of the puzzle in the stock market. Gold, often seen as a safe haven asset, might seem immune to the whims of retail sales data. However, the truth is, they are subtly interconnected. You see, robust retail sales figures often point to a heating up economy, and with that comes the risk of inflation. When prices of goods and services are steadily rising, investors tend to flock to gold as a hedge against inflation, as its value tends to hold up better than paper currency in inflationary environments. So, strong retail sales can indirectly boost demand for gold as a safe haven against inflation. Conversely, if retail sales slump, it suggests a cooling economy and potentially lower inflation. This can dampen the appeal of gold as an inflation hedge, leading to a potential decrease in its price. Furthermore, the Federal Reserve's response to retail sales data, particularly its decisions on interest rates, can also impact gold prices. Higher interest rates make it more attractive to hold interest-bearing assets, reducing the allure of non-yielding assets like gold, and potentially putting downward pressure on its price. So, even though it's not immediately apparent, retail sales data plays a role in the price fluctuations of this precious metal. Now let's shift our focus to the global stage and see how US retail sales data can make the US dollar dance to its tune. Imagine this. A fresh report hits the wires, revealing that US retail sales have blown past expectations. This surge in consumer spending signals a robust US economy, which can strengthen the US dollar compared to other currencies. Why? Because a strong economy often attracts foreign investments seeking higher returns, and those investments typically flow into the country's currency, boosting its value. Conversely, if retail sales in the US stumble, it suggests a potential weakening of the US economy. This can make the US dollar less attractive to foreign investors, potentially leading to a decline in its value relative to other currencies. The Federal Reserve's monetary policy decisions, often influenced by retail sales data, also play a role in the value of the US dollar. If the Fed raises interest rates to combat inflation fueled by strong retail sales, it can further attract foreign investment, strengthening the US dollar. Conversely, if weak retail sales prompt the Fed to lower interest rates, it can make the US dollar less attractive, potentially leading to a decline in its value. Even the world of cryptocurrencies, often perceived as detached from traditional economic indicators, isn't entirely immune to the influence of retail sales data. When retail sales are thriving, It suggests consumers have more disposable income, some of which might find its way into riskier assets like Bitcoin or Ethereum. This influx of capital can fuel rallies in the crypto market, pushing prices higher. Additionally, strong retail sales can contribute to a positive overall market sentiment, encouraging more risk-taking and further boosting crypto investments. However, when retail sales falter, it can trigger a risk-off sentiment in the market. Investors tend to pull back from speculative assets like cryptocurrencies during times of economic uncertainty, leading to potential sell-offs and price drops. Bitcoin, often touted as digital gold, can be particularly sensitive to shifts in risk appetite driven by economic indicators like retail sales. In times of economic uncertainty reflected in weak retail sales, investors might flock to the perceived safety of traditional safe haven assets like gold, potentially at the expense of Bitcoin. So, while the crypto market dances to the beat of its own drum, retail sales data, through its impact on risk sentiment and liquidity, can subtly influence the movements of Bitcoin, Ethereum, and other cryptocurrencies. As we've seen, retail sales are far more than just a measure of consumer spending. They are a critical gauge of economic health and consumer sentiment, impacting everything from stocks to gold, currencies, and crypto. By understanding how retail sales data ripples through the market, you can gain valuable insights to make more informed investment decisions. Remember, knowledge is power, and staying informed about key economic indicators like retail sales can give you an edge in navigating the complexities of the financial markets. If you found this helpful, don't forget to like, subscribe, and hit the bell for more market insights.